Hello, my name is Nick Pienta, and I'm here to talk to you today about mortgages. We're going to discuss what a mortgage is, the different types of mortgages, and the process of getting a mortgage. A mortgage is a loan used to purchase a home or other type of real estate. The borrower agrees to pay the lender over time, typically in a series of regular payments that are divided into principal and interest. The principal being the original cost of the home, and the interest being the cost the bank charges for the borrower to purchase a home. This allows an individual to purchase a home that would normally be too expensive for them to purchase. Mortgages are generally categorized in three different ways. Firstly, by length of time, ranging anywhere from 5 to 40 years long. The length of time determines how long your payments on the loan are scheduled to occur, with the most common lengths being 15 and 30-year mortgages. Second, by specific populations that may not have the income, credit scores, or down payments required to qualify for conventional mortgages. A good example of this is the first-time homebuyers. Lastly, by whether it's a fixed interest rate or adjustable interest rate mortgage. With a fixed rate mortgage, the interest rate stays the same for the entire term of the loan, as do the borrower's monthly payments throughout the mortgage. With an adjustable rate mortgage, the interest rate can change based on how the housing market is doing. The initial interest rate is often a below market rate, which can make the mortgage more affordable in the short term, but potentially less affordable long term if the rate rises substantially. The total amount of your mortgage depends on where the mortgage falls into the previously mentioned categories. Since different lenders will approve borrowers for different amounts, it pays to shop around. An online mortgage calculator can help you compare estimated monthly payments based on the type of mortgage, interest rate, and how large of a down payment you plan to make. The process for acquiring a mortgage is as follows. You first speak to an approved mortgage lender. These lenders can be found fairly easily with most banks and credit unions, as well as online lenders. Your local realtor should also have lenders they work with regularly that they can recommend. The lender will then ask the borrower to provide them with information that indicates the borrower's current financial state. Information such as bank statements, paychecks, credit scores, and tax returns will all be examined. The borrower will be given a pre-approval letter, which tells the buyer what type of loan they qualify for and what they can afford. It is up to the borrower to decide which will work best for their own situation. Let's say you've worked with your local realtor, found a great house that you now want to buy. You have to put an offer in and it was accepted. Once a buyer and seller agrees on the terms of their deal, both parties will meet at what's called a closing. This is when the borrower will make their down payment to the lender and the buyer will sign any remaining mortgage documents. Seller will transfer ownership of the property to the buyer and receive the agreed upon sum. Mortgages are an essential part of the home buying process for most borrowers who aren't sitting on hundreds of thousands of dollars of cash to buy a property outright. The multitude of different types of home loans available could make ownership a reality for individuals of every walk of life. Feel free to reach out to me directly if you have any real estate questions or have any interest with having me be your real estate agent. And don't forget to like and subscribe my channel if you like what you see.